What if you could beat the stock market forever? Not some lucky one-off year. I'm talking about beating the total market return year in, year out without having to do any extra work. Sounds impossible, right? Well, in the next few minutes, I'm going to show you an ETF portfolio that not only beats the market, it leaves it dead in terms of performance. This portfolio is so strong, it's going to make you a millionaire in half the typical time. And the shocking thing is, it's arguably less risk too. I backtested this portfolio as far as I possibly could. And what I have learned is after nearly 20 years of investing, I've been buying ETFs wrong all along. And it's cost me an absolute fortune. We all know that the S&P 500 typically returns about 10% a year historically. Meanwhile, this newly researched 70-25 portfolio has amassed a staggering 17% a year on average. That's more than 70% extra returns on average every single year. I want to cover why this portfolio dominates the S&P 500 and then answer a very serious and personal question. Should I sell my 2 million plus ETF portfolio and buy this new strategy instead? After all, every indicator is telling me to. To really put this strategy to a test, we need to see how it will fare with an average Joe, or should I say, the average Jamie. You can come in now, mate. Bloody hell, mate, it's freezing out there. Huh? Absolutely gibbering. Really, mate, it's 10 a.m. It's 8 p.m. somewhere, mate. Cheers. Jamie is an average guy, earning about $60,000 and lives in the United States. He dreams of reaching financial freedom as fast as possible, leaving behind his everyday 9-to-5 grind. He also knows that experts say you should be investing at least 15% of your monthly income. They do say that. Yeah. And he's already amassed $10,000 in his current investments. But Jamie is a bit of a dreamer. He always wonders if there's a better, quicker way to escape his mediocre financial life. He asks himself constantly, is there a better way, a quicker way to build up his investing portfolio, all while without taking any extra risk? Well, let's see how this market-busting portfolio will stack up against Jamie's current plan. If Jamie continues with his initial $10,000 invested and then adds a $750 a month into an S&P 500 ETF, like experts recommend, in 25 years, he will have about $1.3 million. The ticker VOO, which follows the overall S&P 500, is Jamie's favorite ETF. It's his go-to solution to get him out of his financial troubles. I love that ETF, man. Why? Well, it's because it offers a low expense ratio of 0.3%. This is because the fund's management team are not actively trading. It invests in all the stocks in the S&P 500, meaning that you capture the biggest companies in the United States all from one simple purchase. And on your backtest thingy-majig, it had a decent annual return of 11.78% over the last 10 years. Jamie, I'm impressed. Yeah, I know, you can't beat that, mate, huh? You just can't. Okay, watch this. If we take Jamie's criteria and put it into the two portfolios I backtested, the first one I'm calling the 50-50 portfolio, it beats Jamie's VOO option by more than 3.5% every year. This means that Jamie's potential investment in 25 years has grown by an extra $1 million. By just taking this 50-50 option, Jamie's potential financial investment has leaped from $1.3 million to $2.3 million. Hang on, you're saying I could get an extra $1 million from this portfolio? Yeah, that's exactly what I'm saying. And it's not even the best option. I also backtested a 75-25 option, which literally obliterates the S&P's returns. It amassed an average annual return of 17.67%, and what this does to Jamie's final pot is literally insane. If Jamie sticks with his current plan, he can expect in 25 years about $1.3 million, but with this 75-25, he could amass a staggering $3.5 million. Are you serious? Yeah, I am. The reason it dominates so much, believe it or not, actually comes down to the flaws within the S&P 500 itself and the overall market. Every year, certain sectors and companies tend not to perform. They say that the cream rises to the top, and that is exactly true with investing. If we break down the S&P 500 and look into sectors' performance through the years, we can see many sectors just lag the market over a long period of time. Utilities, financials, energy, even real estate on average tends to lag the S&P 500's historical results. So why not cut the dead weight and just focus on the good stuff? The best performing sector over the past couple of decades has been the information technology sector. And if you think this sector is going to continue to grow, as I do, why not just focus your attention there? There is a word of warning I have to say here though. It is a lot more volatile. In the S&P 500's worst year in the last 10 years, it lost 18%, and my 70-25 portfolio in its worst year lost 28%, which is tough to stomach. The only way this portfolio can work is if you constantly invest every single month through thick and thin, especially when things look thin. There is zero exceptions. Otherwise, it just won't work. And that's what you should do, right? That's exactly right, Jamie. I'm starting to get proud of you. Don't be. Yesterday I ate a candle. Okay. There is another problem too, which is diversification. If we just went into IT technology, we don't have enough diversification. So that's why I covered it with the second ETF in the portfolio. The second ETF is ticker symbol VT, the Vanguard Total World Index. You literally can't get more diversified than owning absolutely everything. Now, if you want the full 38-page research I did on this paper comparing the S&P 500 to these two portfolios, you can get it for absolutely free via the link on the pinned comment. But with these two ETFs and constantly investing into them over a long period of time, you do stand to dominate the overall market returns, provided history does continue its trend. So the big question of all is, will I be moving and selling my 2 million ETF portfolio and going into this 75-25 option? I have made my decision, and I'm going to disclose that in an upcoming video because it changes everything.